Well, hello and welcome to another edition of OESA Supplier Insights. I'm Mike Jackson. I have the pleasure of serving as Executive Director of Strategy and Research at OESA. Today, I'm going to walk you through our OESA Automotive Supplier Barometer, the third quarter results on capital markets and innovation. And so appreciate RSM and their support for the OESA Supplier Barometer. Let's just jump right in. When we look at third quarter results, we survey our executive members on their 12-month outlook and how has it changed over the past 3 months. And clearly, we see a significant shift toward a higher degree of pessimism. And so much more pessimistic translates to a lower supplier barometer index. And when we look here to the right, we see that we've fallen another 8 points. So from 40 down to 32. And yet that's 18 points below neutral, neutral being 50. So supplier executives are decidedly more pessimistic over far greater concerns of the overall economy, as well as significant concerns over inflation, rampant inflation, and greater concerns over the risk of recession. So we'll talk about that a little bit more here in a minute. Additionally, if we look at the size of automotive suppliers, what's interesting here is 32 is the index, and yet some suppliers, based on size in terms of revenue, they are even more pessimistic than that. So obviously a bit of a range there. And so it's just pretty important to recognize that universally, for the most part, suppliers remain pessimistic. And so except for the very smallest are less pessimistic on net. So when we look here at the greatest threats, not a big surprise, but production shutdowns due to shortages continues to be the greatest threat. And so this is really more of the same, where suppliers have continued to pay extra in terms of wages, maybe overtime premiums, shift premiums, and expediting freight, higher raw material costs and the like, and only to have orders canceled, and so tying up cash flow. And so that's another, that is certainly the greatest threat. Additionally, though, rising up to the second place is weakness in the U.S. economy. And so this one is really where we've seen the greatest concern. And we'll talk about the risk to recession here in a minute. Labor availability constraints continue to be a factor, and higher interest rates certainly are a growing threat here as well. So this is an important question we've added here for the third quarter. Please estimate the probability of U.S. recession occurring over the next 12 months. And what we see is that our members are decidedly concerned. The vast majority anticipate a recession here. And yet what I would say is that if we look to the right, how prepared is your company if a recession were to occur? And what I think is pretty striking here is that no response is that they're completely unprepared. On a 5-point scale, just 10 to 15% of respondents indicate that they're somewhat unprepared. And so I think that bodes well, from the standpoint that there are many suppliers that, clearly over these past 2.5 years have faced a tremendous amount of pressure. And so we know this, not a surprise. And so in many cases, I submit that, a number of suppliers have made some difficult decisions, or have simply streamlined and have been operating at a leaner level here. And so as a result, maybe a little bit more prepared at the prospect of recession here. Additionally, then we ask a little further, how could your company better prepare for recession? And cost and headcount reduction is the top there. Balance sheet, cash flow management, operations flexibility, consolidation, investment reduction or delay, another top one there, and then cost recovery. An important one here, clearly cost recovery has been something that suppliers have had to manage and pursue, no question. I do believe that in light of recession, or the risk of recession coming here, that window is likely closing rather soon. Scenario planning, absolutely crucial, and so an important one here. So if we look to the right, what has your company done to prepare for a possible recession? Spend conservation. And so the top item there with the most responses, and then balance sheet management, cash conservation, lean management. And I would say, so headcount freeze, that clearly number of surveys here have been done more recently indicating a very high number of organizations, and within automotive and far beyond, so across the economy, have instituted a hiring freeze. And so that's something clearly a little bit of a a dynamic, a unique dynamic in terms of needing more people, but looking at freezes maybe in select areas. Debt reduction and elimination, an important one. Restructuring as well. So with that, let's continue on here. I think important in terms of capital required, looking at capital needed to support the number of program launches. We know it's with electrification, the number of programs coming has grown significantly, and so there's a tremendous amount of activity. So this bodes well, but it also does mean that CapEx is expected to rise. And so if we look even here at the deeper blue shades, and if you were to aggregate them, that's 11% and higher. That still accounts for the most part here across it's approaching that 30% threshold, in that 30% range. And so that is a very strong factor here, for the type of activity. And so pretty significant increases here in the number, in the amount of CapEx as we transition toward a higher level of electrification and balancing this here going forward. So with that, if we look then over the next 12 months, how confident are you that you'll be able to access required levels of capital at appropriate costs for the various uses here that are listed? And so interestingly enough, tooling and plant and equipment investment really rank at the highest there. And so very strong in terms of the very confident, at that, over the right around that 40% threshold, and then somewhat confident there, another 40+%. And so very strong on those factors. So, interestingly enough, I do think it's important here when we look and it's important given the risk of recession, but going forward, product innovation investment, coming under a little bit of pressure. And I think that's an important one here. We look at the prospects for organizations, kind of overperforming on the way out of recession is an important one there. And then also looking at M&A opportunity, also the lowest item there that's identified, and yet certainly a pretty strong opportunity for those companies able to pursue M&A activity at this point in time. So if we look then as well at sources of capital over the next 12 months, whether the indicate whether the following sources of funds will increase, or decrease, or remain the same in importance on your balance sheet. I think it's pretty striking here. Bank loans certainly slated to increase rather significantly, jumping to that 31% threshold. Also, then we see a pretty significant rise in overall debt, and so 40% indicate that will increase, and then overall equity also rising by 31% here. And so if we see the net change here, pretty significant in terms of bank loans, overall debt, and overall equity. So with that, just to kind of wrap things up here, a couple of final slides looking at current global footprint. For each of the following regions, how do you anticipate regional CapEx investment levels shifting over the next 5 years? North America, certainly here, disproportionately strong. We've got a North American audience, or a North American centric audience for sure. But Europe under pressure. Certainly the rest of Asia under pressure, South America also under pressure. But then China remains quite strong given escalation in geopolitical tensions. And so certainly a very strong player, and yet represents a strong number 2 in terms of priority. So if we look here at innovation, if you look at the pace of industry change, and you look at describing your firm's pace of innovation, the vast majority of our members, over 80%, indicate that they're either on pace or maybe ahead of the industry. And so I think this is an important one. Clearly the industry is undergoing tremendous change, dramatic change at this point in time. So a couple of key points for those who feel that they are leading or slightly ahead of the industry. Tremendous focus on R&D, unique technology for relevance with EVs, keeping R&D investment rate, shifting that focus to new mobility, looking at a wide range of opportunities to innovate as well. The other piece then here is there's a note toward the bottom that speaks to investing in startup companies. And so I think there's also an opportunity there as well, especially given the fact that no one organization can fully fund technology in every area. So it's an important area then to also leverage. Looking to the right, what specific steps has your company taken in order to increase its pace of innovation? It's pretty, a wide range of compelling answers here. Created a new focus on R&D group, not tied to current business. So certainly a more focus on forward looking. And so this is an important one here as well. Additional innovation resources have been hired, and also focusing on then future needs, customer needs as well. So an important aspect here to ensure that innovation remains a priority. So with that, the final slide here, just to look at and see how would you rate your company's current and near-term level of M&A activity. And you see here, nearly 10% indicate that substantial M&A activity is really a focus, a priority. And then another nearly a third to a quarter, depending on organizational size, in terms of moderate activity. And I think what's important here is when we look at potentially the risks of recession, interestingly, valuations come under pressure, and it may offer up some opportunities, a buying opportunity for some organizations within unique technology areas. So with that, really appreciate your time and attention. And if you have any other questions, don't hesitate to reach out. Certainly happy to be a resource, and look for us next time on Automotive Supplier Insights. Thank you.